Hello, everyone. Welcome to this session on advanced auditing and assurance. Class, today we are going to discuss a very important and a very interesting topic, which is audit risk. Now, this is something which you are all very much familiar of. I hope all of you have already covered the audit risk in the AA exam. So, this is something which we are going to discuss again in the AAA subject, but now it is going to be a much more detailed version of it. Okay, students, being an auditor, it is very important that we understand very thoroughly that what exactly this audit risk is. Not only just audit risk, in your exam you would be asked about the significant audit risk. Okay, at the AA level, we were only asked about audit risk. Now, here we are also asked about the significant audit risk. So, we have to understand that what exactly is this significant? What does it mean that please find out or evaluate, identify and evaluate the significant audit risk. So, in your exam, you will be given a scenario and you would be asked to evaluate the significant audit risk. Now, significant means something which is very important from the examiner's point of view. Now, before starting with the significance part of it, I want you all to just recall what we have already covered at the AA level. Okay, students, I hope all of you remember the definition of audit risk. What was the audit risk? So, basically, audit risk is the risk of issuing an inappropriate opinion when the financial statements are materially misstated. That means it is a risk from my point of view. If I am the auditor, from my perspective, what is the risk? I do not want to issue an inappropriate opinion. So if I issue an inappropriate opinion, knowing that the financials are containing some material misstatement, that is something which is called audit risk. Okay, now, audit risk basically has three components. What were the three components? The first one is the inherent risk, other one is the control risk, and the third one is the detection risk. Now, inherent risk and control risk together we call them as the risk of material misstatement, right? So, audit risk basically has three components: inherent risk, control risk, and detection risk. And inherent risk and control risk together, it is called as the risk of material misstatement. Now, students, in your exam at the AA level, you were asked about the risk of material misstatement or the risk or the audit risk, right? But there is one more risk which is now going to be asked at the AAA level, which is the business risk. So it's very important that you very thoroughly understand the difference between audit risk and the business risk. Many a times I've seen students getting confused between audit risk and business risk. It's very simple if you understand the concept properly. Okay, students, whenever the examiner is asking you about the risk of material misstatement or the audit risk, you have to think from the auditor's perspective. I always tell my students that you have to think like an auditor. In my class, you always have to think and believe that you are the auditor. You have to come into the shoes of the auditor and think alike. Okay, so whenever the examiner is asking you about the risk of material misstatement or the audit risk, imagine yourself as the auditor and think what could be the risk for you. But if the examiner is asking you about the business risk, you have to think from the management's perspective. From the name itself, it is very evident. Business risk, something which is a risk for the business. I do not own that business. The management is someone who basically owns that business. So, what is the risk from the management's perspective? That is what is called as the business risk. So, the distinction between audit risk and business risk is very important, students, because in your AAA exam, in the first question, you would definitely be asked about either audit risk or the risk of material misstatement or the business risk. So you have to understand the distinction very properly. Okay. Now, when I say audit risk, you have to think that if I am the auditor, what would have been my risk? Of course, being an auditor, I do not want to issue an inappropriate opinion. And any condition or any situation which is leading to the point that I might issue an inappropriate opinion, I might issue a wrong opinion because the financials are having some material misstatement, that would be called as the audit risk or the risk of material misstatement. Okay, so these are the three components of the audit risk: inherent risk, control risk, and the detection risk. So definition, I have already discussed that it is the risk that the auditor expresses an inappropriate, that means a wrong opinion. For example, imagine that in a particular situation, I, being the auditor, should have issued a modified opinion, but wrongly I have issued a unmodified opinion. In that case, this situation is basically an audit risk. No auditor would want to issue an inappropriate opinion. Why? Because it could lead to penalties, it could lead to the reputational damages. So obviously no one wants that. Okay, so whenever the in any situation auditor expresses an inappropriate opinion, when there are material misstatements in the financials, that is what is called the audit risk. Now, as I told you all, that audit risk basically has three components: inherent risk, control risk, and detection risk. Students, you all must clearly understand that the risk of material misstatement, that is inherent risk, and control risk, this is something which is there before I even go for the audit. I was not even present at the audit place. Still, there were those risks. That means I am not able to control that. I have nothing to do with that. Okay, these risks are already there. Inherent risk is already there. Then control risk is already there. Why? Because the management has not applied the appropriate controls. So I can't do anything about it. I cannot reduce the audit risk considering the inherent and the control risk. But I can definitely have a control over the detection risk. Why? Because the detection risk is the risk that the procedures which I have applied to reduce the audit risk to an acceptably low level, they are not able to detect the misstatement. That means this is something which is my fault. Okay, if I would have applied much better procedures, much more procedures, I would have been able to detect the misstatement. That means this the only component of the audit risk which I am able to control, it is the detection risk. By applying more procedures, by doing more thorough workings, by having more experienced team, by allocating more time to the audit, I am able to reduce this detection risk. And of course, when the detection risk is reduced, it will lead to the overall audit risk to be reduced as well. Okay, so remember that the only and only element of audit risk which the auditor can influence is actually the detection risk. Okay, because this is because of me. I am able to do something about it. For example, if the client is putting the auditor under undue time pressure to complete the audit, it will result in the audit being rushed and the misstatements possibly going undetected. So in this situation, I will not allow the client to put such pressures on me or put such deadlines on me, or I will apply more staff, more team to do the work. Then in that case, I still will be able to detect all the material misstatement. So what I have we understood about it, that the only and only component of the audit risk which I, being an auditor, can control is the detection risk. Because of course, every auditor would want to reduce the audit risk. Nobody want the audit risk to be high. I hope this topic and this concept is very much understood by everyone. Students, when I talk about the first question in your exam, which is going to be the 50 marker question, you all must know that out of these 50 marks, 40 marks are for the technical part and 10 marks are for the professional skills that you demonstrate while you write your answer. Okay, so about this first 50 marker question, a major portion of the question will come from this particular topic only. You will be asked to identify, evaluate the significant business risk. You'll be asked to identify and evaluate the significant risk of material misstatement, audit risk, and also you will be asked to prioritize those risks. Okay. So by by we first have to understand the concept of the audit risk and the business risk, and then we'll go to the significance part of it or the prioritization part of it. Okay, students, if you understand the concepts thoroughly, you will be able to write the answer in a much more better manner. Okay, so I have discussed the concept of audit risk with you all. Now we'll be discussing the business risk part. Students, as I told you, when you are writing down the answer on the risk of material misstatement or the audit risk, you have to think like the auditor. You have to have the answer from the auditor's perspective. Think like the auditor. Imagine yourself into the shoes of the auditor. But now, when you are asked about the business risk, you have to think from the management's perspective, that what could be the possible situations which would have affected the management, right? So business risk is the one which is resulting from any significant condition, event, circumstances, actions on inactions that could adversely affect an entity's ability to achieve its objective and execute its strategy. Now, I want you all to think that you have just started a new business. Okay, you are a part of the business. You have just started a new clothing line, let's say. Okay, now, of course, students, when I start a new business, my main objective is that I want my business to grow. I want my business to earn more profits, right? Now, if there is any situation which is leading to a point that it is adversely affecting my company's or my business's ability to make profits, to grow further, that is what is called a business risk. It could be anything. It could be loss of the major customers. It could be competitors entering the market. It could be increase in the cost price of my raw material. All of these things basically will have an adverse impact on me, that means my business, achieving the objectives. So whenever you are asked about the business risk, think yourself that like you are in the part of the management. Write your answer from the management's perspective whenever you are writing down a business risk. If you have this clear mindset, if you have this clear distinction of the mindset, you'll be able to write a very good answer. Okay. Now, when I say business risk, auditor must assess business risk. Now, your question would be that, ma'am, we are the auditor in the question, right? Now, if we are the auditor, what is the point of writing down or answering about the business risk? We are not part of the management. We are not part of the company. Then why we are identifying the business risk? It is because many business risks ultimately leads to the audit risk. There are multiple business risks which ultimately leads to the audit risk. So this is because why we are understanding the business risk as well. Okay. So auditor must understand and assess the business risk so that he can have a clear understanding of the company. He will be able to identify that what could be the possible risk of material misstatement, and through that we will be able to analyze the audit risk as well. That is why in your exam you are not only asked about the audit risk and the RMM, you are also asked about the business risk, because there could be multiple business risk which will ultimately become the audit risk or the risk of material misstatement. So it is very, very important that you all understand the business risk as well. All right. So first, what we have understood from this is that you have to have the understanding and the methodology and the mindset of the management whenever you are writing a business risk. Okay. Students, business risk could come from different factors. There could be some external risk and there could be some internal risk as well. That means there are some external factors which leads to the business risk, and there are some internal factors as well which leads to the business risk. Let's talk about that. External risk are the risk derived from the environment in which the company is operating. Okay. For example, there's a change in the legislation. There are some change in the interest rate. There are changes in the exchange rates. There are price wars initiated by the competitors. All of these are something which is because of the environment, because of the outside environment. This is not something which I can control or the management can control. This is something which is more from a macro point of view. Okay. So, any risk which is coming because of the environment in which I'm operating, the regulations have changed, the laws have changed, the interest rates are changing. So, what could I do? Right? So, if these are leading to the business risk, it will be called as the external risk factors. And there could be some internal risk factors as well. For example, there could be some risk because of my employees. There could be risk because I was not able to modernize my production concepts or production methods, or there could be some frauds happening in the company. Now, all of these factors are not because of some outside factors. This is because of the inside factors. These are leading to the business risk. So, business risk could come from either the external factors or the internal factors. And these business risks will ultimately, it could be possible that they become the risk of material misstatement or they become the audit risk. That is why it is very, very important for the auditor to understand the concept of audit risk and the business risk, because if I do not understand the business risk, I might just skip, or I might will not be able to identify some of the audit risk as well. I hope this concept is clear to you all. You all will be able to understand in a very good manner that what is the difference between business risk and what is the difference between audit risk, because in your exam you could be asked any. I hope you all have understood the concept. Thank you so much.